Are you scanning the internet or the news sources this weekend trying to find out about the markets? Is this a dip to be bought? Is this the start of a new bear market? Are the markets about to crash? Should I move everything I have into cash? Should I move all my cash into the market? How long is this going to last? What is happening? And you're looking on the internet, you're watching CNBC, you're looking at the Wall Street Journal, you're looking at what you think are the wizards of smart, yet none of the wizards of smarts forecasted what you're experiencing today. I am Bagadon at StockMarketCaddy.com, and today is Saturday, September 24th, and I am making this video just for you, especially if you consider yourself an investor over a trader. Yes, I am a trader. My wife is a trader, but we are also investors. There really isn't much difference. It's just a question of interval. Investors don't care to trade day in and day out, and that's just fine. But how do you go about making decisions objectively, consistently, to protect the profits that you have? 20 years ago, 20 plus years ago now, my wife and I were fed up with the financial media. We saw it then as fake. I used to call it faux, F-A-U-X, the faux media, long before Donald Trump. And we set out to build ourselves a tool to help us make broad decisions about when to be in or out of the market, staying on the right side. We were so successful, we began to reduce our interval, and we became the traders that we are today. But that doesn't have to be you. Let me show you in the next few minutes our flagship product, SMC, Stock Market Caddy, the Swing Machine Plus. And I'm going to look at ETFs, exchange traded funds, which for the most part is where most people's money in the market is parked, even if you're with a mutual fund. So let me do something here. I'm going to change the settings from futures, which is where we had this, and that's another product for another time. And we're going to change this to stocks. We're going to set this as true. Now, we need to make an assumption here, and this, you could do this yourself, by the way. This tool could be sitting on your desktop, or you could be subscribing on a monthly basis and seeing a video representation every night or every week, as often as you'd like. We post them every night. I'm going to put in $50,000. So what we're assuming here, now you could put in 5,000, 10,000, 25,000, you could put in 100,000. But we need to put in a block of money so that it'll calculate the purse, how much Swing Machine is up or down based on the last decision that it made. So let's do that. And you're going to see me make another adjustment over here. It happened to be 240-minute interval. And we're going to change that interval, all of the symbols, with the push of just one button. And we're going to turn it into a daily. And there you have it. So let me show you what it is you're looking at. This is the SPY, the ETF for the S&P 500. Swing Machine Plus, and by the way, Swing Machine Plus does not use moving averages, MACDs, trend lines, all of the crap that you see on the internet. That crap is crap. But the SPY, SPY, if you had 17 days ago, let's put it this way, 17 days ago, Swing Machine Plus said that the market was headed down at 395.18 at 4 p.m. on August 31st. The trend is completely down, and they're virtually panic selling. Now, if you had shorted it, yes, for $50,000 a block, you'd be up that amount of money. But let's just say, for the sake of discussion, that you were long in your IRA account. You had bought $50,000 worth of the S&P 500. If you had sold and went to cash, you would have saved yourself a $3,500 drawdown. Or maybe you used options to protect yourself. Or maybe you just decided back in August to stop averaging in. Could have done any number, but you get a consistent, objective view of what the market is doing. The Dow, 18 days ago. The NASDAQ, 18 days ago. The Russell, 16 days ago. Now, look at this. The dollar. Yes, you could have put your cash into a cash ETF 150 days ago. Rather than letting your $50,000 sit and getting next to nothing, you could have put it into the dollar ETF at $25.72 back on February 18th, and you would have nearly $9,000 in profit. All the gold bugs, buy gold, buy gold, buy gold, right? For inflation. Hasn't been the case. Gold has been short for 28 days. Now, I'm not going to take the time here and now to go through every single market. You can put in whatever market you want. Here I have put in all the ETFs. Excuse me. The financials, consumer discretionary, technology. Let's scroll down. I'm sorry, had a little frog in my voice. Energy, building materials, healthcare, utilities, consumer staples, retail holders, gold miners, regional banks, transportation, the Vanguard total stock market, bonds, corporate bonds, emerging markets. And yes, they're all down. And yes, we are in a bear market. The only place to have hidden your cash was in cash. In fact, if you had leveraged it into futures contracts, you would have gotten a 600 to 700% return in the last 7 months. But I hope you're still with me. You might be saying, well, Don, that's fine, but I don't want to be trading every day. By the way, if you're an active manager of your money on a daily basis, you should not look at the positions intraday. Just look at them daily. But you might be saying, even that's too active for me. I don't want to see them every day, Don. I'm an investor. That's fine. I don't have a problem with that. We sometimes invest. With the push of a button, we can turn this tool into a weekly view. Aha. Now let's look. On a weekly basis, Swing Machine said, get out. Back in April, you would have saved yourself 10% on that 50,000. Look at these signals. You would have on the dollar 54 weeks ago, would have been back in September of 2021. You could have had a 20% return in cash. Is that not crazy? Let's scroll down and I'll let you pour over. These are short signals. Now, you don't have to short the market, but just don't be in the market. Maybe suspend your dollar cost averaging. That is for chumps. Don't be a chump. And down. Everything for weeks. Oops, excuse me. This is why we're in a bear market. We're in a bear market. Now, if you are a weekly investor, don't look at the stock market intraday. Don't look at it on a daily basis. look at it just once a week in the privacy of your home office. Plug in Swing Machine Plus and look at your positions and look for opportunity. 54 weeks ago, Swing Machine would have said, enter the dollar. How much money could this tool have saved you? How much money could this tool have made you? Now, we can also, a person might say, well, that's even too active for me. I'm a monthly investor. That's fine. Let's change it to a monthly view. Are you kidding me, Bagger? No, I'm not. Now, this is a little bit different. Now, the monthly signals are monthly. They're not going to come every month. And if you are a monthly investor, you probably don't want to look at the market intraday or daily or weekly, but once a month. The SPY on a monthly for the monthly investor went long 142 months ago, back in 2010. For that person, they have turned $50,000 into 96. On the QQQs, that was back in 09. They turned $50,000 into 253. For them, this action in the market is just a dip. But what if it turns into a bear market? So they can have a view as well. We cannot control, you cannot control the market, but you can control what you trade, how much you trade, in the interval that you choose. And we're going to put this back to a weekly or daily view. And you get to choose just how much time you want to spend. Now, of course, if you have the capital, you have the passion, you have the interest to learn, and you want to trade intraday, then this is a fantastic tool to do that. We wouldn't use ETFs, we would use leverage futures. But let me also show you what you can do in the way of stocks. Now I'm going to add a blank row. It's this simple. And let's put in a stock that has been a very good stock called McKesson. On a daily basis, McKesson went short 6 days ago. Now, you don't have to go short McKesson, but if you're in McKesson, maybe you want to take a little bit of money off the table. Maybe you want to sell a covered call. Maybe you want to put a put under it. Maybe you just want to slow down your dollar cost averaging. But you might say, but Don, I'm not a daily trader of McKesson. I think it's a great company, which it is, has a great future, which it does, all fundamental, but I want to look at it on a weekly basis. On a weekly basis, McKesson has been long for 123 weeks. At this price, at this time, on this date. And it's fine. So for the person who might be invested in McKesson on a weekly basis, no big deal. Maybe just sell some covered calls for several weeks at a time as the market digests and pulls back, and you can collect basically a dividend on steroids. I show you this not to make a specific recommendation to buy or sell anything. We're showcasing for those people who want to take control over this part of their life, a software tool, but we have many tools, decision-making tools that you can use to manage this part of your life, to demystify the markets. In the end, folks, this is the way that I look at it. I assume, my wife assumes, that what is known in the market is known by everyone, and it usually is. Everyone but us. And if I will attempt on a weekend or during the year to try to be an expert on McKesson or on the financials or on technology, I'm going to be chasing my tail. But if I can have a tool such as Swing Machine Plus to track money flow, I can assume that those people that are in the know, who are buying McKesson on a weekly basis, that may be a place where I want to go to. The new opportunities will populate, provided you're scanning for them on a daily basis, a weekly basis, or a monthly basis. Entirely up to you. It does take time. There is a learning curve, and for that, we do offer what we call a Q-School, a 3-week program. And maybe you want to be more active. Maybe you want to be less active. Maybe you want to push the envelope a little bit more and become a user of options in defining your risk. I am Bagadon at StockMarketCaddy.com. I want to thank you for the 15 to 16 minutes you just gave me. Feel free to visit our website. Feel free to follow for free on Twitter or on YouTube. We will also do live sessions intraday. You are welcome to call me at 813-758-8263, 9 a.m. to 9 p.m., 7 days a week. If I'm outside working on my irrigation, which is what I'm going to be doing, and buckling down for God, we hope we don't get the hit with that hurricane, I will take your phone call. We built these tools 20 years ago so that we would not feel the brunt of a market hurricane, and they have served us very, very well. We are confident that we can save you time and save you money. It's up to you. Good luck.